We've invested $10 a day for 14 months into individual stocks. In this video, we're going to go over the portfolio, see what holdings we have, also actually highlight a couple of Robinhood features that have been recently added. Let's get into it. Since we started investing $10 a day and posting the updates, we've been able to grow the portfolio up to a pretty large amount for the amount we were investing. Looks like we're sitting just under $5,500 with an annual return of just under 26%. But if we're looking at the weighted annual return, which I'll have right here, we're sitting at just under 40% for the year. So that's really, really good. Now, if we scroll down to the S&P 500 to see what our alpha is, looking at the 1-year performance, 32% about. So we've actually got an 8 alpha against the S&P 500. And if we look at the NASDAQ, we've got almost a 10 alpha. So this is really, really good performance against the most popular ETFs. Now going back to the portfolio, I'll be able to show you some of the holdings we have. So starting off from top to bottom, it's on the top, it's the largest holding to the bottom, which is the smallest holding. This is our total percentage gain for every single holding. We've got a couple in here that have performed quite well. JD and PayPal, probably the biggest ones. And then we have some that, are basically flat and haven't really gained anything yet. This basically means that these stocks most likely will have the greatest appreciation possible. And some of the stocks that have gone to overvalued levels, we've sold off slowly. And I'll be able to show you through this new Robinhood feature the realized profits and losses, just to show you what sales we've done so far for stuff that's gotten maybe a little bit overvalued or a little bit overweighted in our portfolio. But looking at our top holdings, TLT is long-term treasuries. This is a bit of a safety play in case the market corrects quite a bit. I'm assuming that this ETF will actually appreciate by 50% or more. Also, the current dividend yield on it is 4% annually, which actually gets paid out monthly. So it's really nice for those dividends and the potential gains if the market corrects. But if we go down, Ulta's pretty much flatline. Intel is appreciating just a little bit, but Intel is probably the riskiest play in the entire portfolio. Elvin's Health is quite a safe play in my opinion because it's healthcare and it's fairly undervalued. And then we have our Chinese stocks. These are kind of a play on the Chinese economy in case the US economy doesn't perform as well as it. And we've got about 20% holdings in that. If you can see here, JD.com, Alibaba, and Baidu. So if we go to total dollar amounts or total equity, we can see here the dollar amounts of every single holding. So if you want to pause and see every single one of them, you totally can, but we're just going to scroll through just like that. But back to total percentage change, we've got just a couple other holdings. Comcast is a pretty safe play in my opinion. They do have quite a bit of debt, so that really is the biggest risk there. And same with CVS. It's sort of a safe play because it's healthcare, but also CVS has a lot of debt as well. So that's kind of a turnaround play for me. In case they're able to continue bringing in profit and buying down their debt, I think CVS could appreciate quite a bit. As far as the other holdings, we're not going to get too in depth. You can watch the last month's overview if you'd like, because I go in depth on every single one of them. But we'll actually jump, and not talking about my Donald Trump play here, but we'll actually go into this new feature by Robinhood, and it shows your realized profits and losses. And what really the difference for those that don't know, unrealized profits and losses are basically these. I haven't sold these stocks yet. And like you can see here, PayPal, for example, is up 50%. I haven't sold it yet, so I haven't realized that profit. So it's an unrealized profit. Same with losses. If I don't sell something that's in the negative, I don't realize that loss. And that's basically a tax implication based on how long you hold the stock or whatever it is. You get hit with taxes at different rates. So technically, if you sell something and you've held it for less than 1 year, you get hit with short-term capital gains or losses. So short-term gains are when you sell something after holding it for less than 1 year. And this typically causes you to pay more taxes on it. And then you have long-term gains, which is everything you hold for over a year. And this is typically a set rate. It doesn't matter how much you make. There's not really any brackets on it. And I believe the flat long-term gain tax is about 15%. So it's definitely a very good idea to hold as long as you can so you don't have to pay as much taxes on those profits. Or you just hold indefinitely and you don't have to pay any taxes at all while your stocks go up. But let's look at this new feature, these realized profits, and we'll just be able to see some of the stuff that we've sold. I know these aren't like really big dollar amounts, but this PayPal sale, we just had a little bit too much PayPal, and PayPal had gone up quite a bit, so we just sold a little bit of that, put it into TLT. Here's an interesting thing. Intel, we're currently in the profit and we sold in the profit, but here it actually shows a loss. And this indicates to me that Robinhood actually uses what's called in accounting terms FIFO, or first in, first out. So basically, whenever I first started my Intel position, I think I started it at about $30, and we can actually check here. Yeah, cost. So $31. That's when we started our position. So that position technically has a different cost basis compared to when I started buying at like under $20. So my average is sitting less than whatever the price is, which means I'm in profit. But those first positions that are opened are technically in a loss. So this actually is really nice that Robinhood has this feature, because then whenever I sell these, they're selling the ones that I bought first for me to potentially either capitalize on losses so that it kind of takes away a little bit of the gains that I have for tax purposes, but also if it's something that I've been holding for over a year for part of the position, but the other, if you're dollar cost averaging, you're basically paying long-term gains tax and not getting hit by short-term gains if they're, buying and selling those last positions. So anyways, I don't want to like overcomplicate it, but it's really nice to see that Robinhood is actually using the FIFO accounting method. But just looking at a couple other sales we've had here so far. We've had quite a bit of sales this month, but Disney, we completely exited that position. It might have not been the best sell because I think Disney might honestly appreciate more from this price, but we got a 22% profit on that after holding for a couple months or so. So it's not bad, but I'd definitely like to enter into Disney at under 90, which I wasn't really able to do on the average. And I wanted to really exit at like over $120, which I didn't do. But there are other stocks that I saw that I thought would appreciate a lot faster than Disney, like Baidu, for example. So anyways, we made the decision to sell that and we got a $65 profit there. Same thing with Charter. Charter was a little bit of a risky play. It's a company that's probably going to get phased out at some point via streaming or innovation. In this one, we had a $200 cost basis and we sold at $300. So quite a nice profit there. Paycom is another one of those that we had quite a decent profit on. Same thing, about $100 profit on that. And Charter right here, we started selling off. So whenever the price kind of skyrocketed, we sold off part of it and then it dipped. We bought a little bit more and then it went back up and then we just sold off the entire position. And same thing with Paycom right here for that $30. So overall, not too bad. So if we're looking at the month, we realized $308 of profit. So that's really, really good. That's not bad for such a small account. But anyways, this is basically how the account looks. This is the update for the month. Over the month, we're up $266 on the total portfolio. And you know what? It's not bad. And I'm looking forward to making more $10 a day videos. And hopefully you enjoy them. You see them every day. If some of you guys are using it as a way to make your own buys and sells and whatnot, I just want to let you know that I'm making these videos not to, advise you on your purchases and sales. It's just more of documenting $10 a day, being able to actually grow a portfolio just from, a somewhat small investment. But yeah, just use it at your own risk, basically, is what I'm trying to say. Anyways, guys, I'll continue doing the $10 a day updates, so make sure you tune into those. If you haven't subscribed, make sure you subscribe and hit that bell icon for future updates. And as always, I'll see you in the next one.